Hello, Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's the 2nd of June, and we have an interesting market to start with. We are going to be looking at Apple. Apple shares down about 6% or more for the year, down about 16% from the highs when you see the lows trading around 90. But nonetheless, is Apple going to be a buy or a sell here? I think Mr. Buffett, who made a big purchase, about $1 billion of Apple shares on the 16th of May, could be right longer term. In the short term, he may be wrong too, but let's take a look at what's going on exactly in Apple. So let's put our trade triangles in. That's the first thing we do. So we click here once and click on the weekly, and the daily not so important, but we'll leave that in for now. But you can see the long-term trend in Apple for the first time in a long time is negative. Now the intermediate term trend, which is right here, 95.90, has turned positive, indicating you should be on the sidelines. That's why we have a score of 55, indicating a trading range. And that's the important thing to remember here. So let me just go through that again. So the monthly right here is the important one. That's for trend. This is just to do with stocks now. That's for trend. And the weekly right here is for timing. So based on this, you should be out of the market and on the sidelines. Now, a couple of other things are happening in Apple. One is we're just flat on the support line at 50, indicating potential support. But also, if we put another indicator in here, like the parabolic, you can see the parabolic has indicated that we should be seeing some weakness in this market. So you can see the parabolic basically is these little dots you're seeing right here. And once the market goes below there, it's indicating that the trend is down. Now, the trend started moving down on the parabolic, and we kicked in quickly with the weekly. And this is pretty much where Carl Icahn and Mr. Tepper sold out of their shares in Apple. They took a nice profit, but they sort of saw the writing on the wall, and of course it precluded a big drop in the stock down to around 90, just under 90. So there it is. So here we are. The market came back up. Mr. Buffett came in right around here. Trade triangles kicked in shortly thereafter, and sure enough, we did see a rise in Apple. Now, kicking in here was not getting long. It was covering a short position and saying stand on the sidelines. Two things to look at right now. One is the move. Right, there's the parabolic. See the and then we fell below that, just like we did here. Is it going to be another prelude to that? I don't know, but let's take a look at the RSI on support. If it closes below 50, not a good sign. That'd be like it did right here, and you can see what happened to the market. One thing to look at longer term. Let me clear the screen, and that is I'm going to take the parabolic off. Easy to do in a Market Club. Just click here, and let's go maximum. Okay, and let's take all the trade triangles off, and let's put it long-term trend line in. And if you take our trend line tool, go from the low lows all the way to where we are here, and you pretty much get this low at 90. Very important. If we close below that, it's going to break this long-term trend line, and that's a significant move for Apple. And we still think we could see further downside pressure based on our Fibonacci's. And the Fibonacci, if we take the Fibonacci, we'll take that tool, go from the highs here, drag it down to the lows right here, and we could see it trading down to 86. We've had a correction, so it's not that, and maybe that's what Mr. Buffett's thinking about. We've had the correction, it's still a good stock, lots of money, blah blah, but nonetheless, the trade triangles are negative right now, or neutral, and this long-term trend line is definitely something you should watch in the future. Okay, we're looking at the S&P 500. You can see quite clearly this is sort of just going nowhere fast. It's really kind of doesn't know what it wants to do, and I think this is you've got sort of resistance right around these levels here, and it could go either way. It really could. But the thing to watch is this 50 line on the RSI. If we go below the 50 line, we're well above it now, but if we go below there, that's something to be wary of. And the other thing to look at, in my opinion, is going to be our trade triangles, because they're very positive right now on this index, except for the daily. The daily is not so important. We have an 85 score indicating a strong upward trend, but nonetheless, it's still this. I'm a little concerned about the resistance here, and that's only natural as a trader. You're going to see some people sell against the professional traders because I think the risk is not that great. But if it goes below, over there and closes above there, then it's a different situation. Okay, we're looking at the Dow, and you can see the Dow really has not quite the same pattern as the S&P 500. You can see it's come down, sort of come back up, sort of a broad trading range. It is a trading range because it's a plus 60. The weekly is down and the monthly is up. Now, if the monthly is up, indicating the longer term trend is still positive, but the shorter term trend, the intermediate term trend, is negative, indicating really a sidelines position, which it sort of paraphrases what I've been saying. Is just, it's not a clear-cut picture these markets are going to go higher, in our opinion. Now this is the NASDAQ. The NASDAQ is acting very well, but again, it's up against this resistance level, which I think it could be a really potential block. I don't know. And look at what's interesting. We talked about pivot points, and we've pointed these out before, how they work, but here's almost a classic pivot point. Here's the double bottom. Here's the pivot point, so you just measure from here to here, flip that over to here, and it kind of gets you where you want to be in terms of measurements. But nonetheless, I think the market's going to have to do a little more work to push through this resistance level. So we'll see. This is crude oil. The Saudis keep pumping oil, and they're trying to break the market. But remember, we talked about the psychological 50 level and how important that was. We talked about that a couple of days ago. Well, we've hit there a couple of times, and the market's been hitting like a brick wall. But psychologically, the 50 level is a whole new dimension, because you have to remember, we've been in the 40 level for months and months and months. 50 is a new dimension. But the other thing to look at is we had a signal yesterday at 49.04 indicating a trend change. Now, this is different from stocks. With futures, you want to use the weekly here, right here. You want to use that for trend, and you want to use the daily for timing. And you can see quite clearly we have a signal to sell at 49.04. It's lower than that right now, and we think you should be on the market, out of the market right now in this, because you've got a mixture of an uptrend in the weekly and a downtrend in the daily, so it's a sidelines position. You need to have these two colors in the same direction. Last but not least is gold. Gold, you can see quite clearly with the trade triangles, is a 55 indicating a trading range. We covered our short position here at 1215.70. We were short from higher levels, and that worked out extremely well for us. So let's see what happens if we're short from this level right here at 1244. So it's about a $30 profit, about $3,000 per unit per contract in this market. So again, no reason to jump in this market right now to buy it. It does have some support back here, but it's very fragile. I would just let the market do what it wants to do, because there's no, in my opinion, there is no rush to be a buyer in this market right at the moment. Let's see how things work out in gold. But longer term, I think gold is going to have a good move on the upside. I think the one thing you want to look at, which is a huge level in my opinion, is right here. You see how the market stopped both times at that level here and here, and that's around the $1,300 level. And again, if we break over that level, and you see, let's say with 1050, let's say around down here to 13, so it's 250 points. That makes it about 1550 potentially could be the target zone once this level's broken on the upside. So let's see how that plays out. Hey, I'm Adam Hewison. Thanks for watching the video today. We appreciate it. Be sure to make a comment on our blog. We'd love to hear from you, and have a great trading day.